In this video, we're going to go over time and price theory and how you can utilize different time windows inside the market. So we will go over specific time elements such as opening prices if you trade both Forex and indices, and you'll be able to know when the market is overbought and when the market is oversold. So this is going to be the only indicator you will ever need in your trading, and this is called price action. I will of course be sending you guys a PDF or a flowchart on my Twitter page, so make sure to follow that. There'll be a link to that in the description down below. But other than that, let's get into the video and tell you guys about part one of time and price theory and understanding opening prices.
Okay, welcome to the introduction of opening prices and how these opening prices work within the market. Obviously, I'm going to make more videos on this topic and go into some more advanced opening prices. So it's all going to be subjective to you, whichever you prefer and helps you the most. The first ones we are going to go over is the ones from the index futures market, and it's going to be inside of the New York session. And we are also going to cover Forex as well. Okay, so before we get into the video and I teach you about all the different opening prices, it's crucial for you to know what an opening price is, otherwise the video won't make sense. So an opening price tells you when the market is oversold or overbought. So there's no indicator needed, it's just pure price action. So over here, this black line represents the midnight opening price. And you guys can see if we're below midnight, then this is ideal buying scenarios. And if we're above midnight, this is ideal selling scenarios. So this is the knowledge that you are going to trade with. You never want to buy above midnight opening price, and you never want to sell below midnight opening price. But we are going to go over some advanced opening prices in this video. However, this is just the general understanding of what you guys should be viewing. Okay, so now we've gone over the understanding of the opening price. Let's get into the first opening price inside of the market. So the first opening price is 8.15, and you're going to map this out once we close on the 15-minute chart. So you will draw out the 8.15 opening price. And if we're below 8.15 or if we're above, this is going to show as if we're in a discount or a premium short term. And this is going to be important as we get into 9.30. So when we open up at 9.30 and we're below 8.15, this will show us the market is in a deep discount. So it's an ideal scenario for us to buy if a setup presents itself. This is going to be the important opening price we're going to have dragged across throughout the AM sessions. So the AM session starts at 9.30 all the way until 11 AM. So this will be the opening price we will utilize. And then the next opening price you're going to have dragged across is 9.30. This is important because it's equities open. So we are going to have the line dragged across on the 15-minute chart once we close. So if we're below 9.30 and we're below 8.15, this will show us the market is in a short-term discount, and if we have a buying scenario which sets up, this is going to be ideal for us to look for buying opportunities. And then finally for the AM session, the last important opening price is 10 AM. So if you guys have not watched my Power of 3 video, I would recommend you do so, because at 10 AM we have a new 4-hour candle open. So if we're below 8.15 and we're below 9.30 and then at 10 AM, so this is an imaginary line and this represents the opening price. If we're below all of this and then at 10 AM we drop lower again, this shows us the market is heavily oversold. And if we have any buying scenarios that pop up, this is where we are going to look to buy and then target the opening price. And vice versa is done if we're bullish. So if we're above 8.15 and we're above 9.30 and we open up at 10 AM and we're still trading to the upside, if we have any bearish setups, this is what we are going to take and we will target the sell side liquidity. So this is how opening prices work within the AM session. You're always looking at them as a barometer. So if we're below all three of these, this shows us the market is heavily oversold. And if we're above them, it shows us the market is heavily overbought. So you don't need any indicator. So this is for indices. I am going to go over a chart example for you for a much easier understanding. But let's go over the Forex opening prices. So for Forex, the opening prices are similar. However, they're a bit different because the only volatility driver for Forex is at 8.30, and this is the opening price you will utilize. So once it closes at 8.30 on the 15-minute chart, you will drag out the opening price. And if we're below 8.30, then this shows that the market is oversold. And if we're above, this shows us the market is overbought. At 8.30, once we have the opening price, if we're above or below, it tells us we are overbought or oversold going into 9 AM. So 9 AM is important because a new 4-hour candle opens. And if we drop below 9 AM and we're below 8.30, this obviously shows us the market is heavily oversold. And if we have any buying scenarios, this will be ideal for us to look for a reversal to target the opening price. So you're always looking at the 8.30 open and then you're looking at 9 AM and you're dragging these across. Once the 15-minute candle closes, that will show you where the opening price is. So after 9 a.m., we have 10 a.m. For Forex, you don't have a new 4-hour candle which opens up at 10 a.m., but 10 a.m. is an important time. Why? Because this is where London close happens and the daily range is capped from 10 a.m. to 12. So if we're below, so this is our opening price and we're below 8:30, and then we have 9 a.m. and we're below 9 a.m., then 10 a.m. opens up and we drop lower again. This is a market that's heavily oversold. And as we're in 10 a.m. and we are oversold, you can look for a reversal for the market to trade higher and take out some of the buy side liquidity. Why? Because we have a 10 a.m. reversal. So this is usually when the market is heavily oversold from 8:30 and 9 a.m. We can frame a London close reversal. So these are the important time windows from Forex and indices. We are going to go over some chart examples right now. However, just like all my other videos, I will be uploading a flowchart on my Twitter page so you can save this. So if you want to revisit this video, it can give you a much more easy understanding. However, let's go over the chart example right now. Here I have an example of AUD USD on the 15-minute chart. So you're not blindly trading these opening prices, you need a narrative. So you can see above this high, we have buy side liquidity. As we have buy side liquidity above that high, what also is this? This is a market maker buy model. So how can we confirm the market wants to go higher? So right now, this is 7:45. For us to confirm the market wants to go higher, we need it to close above this down close candle. So we have 3 consecutive down close candles. They will act as one candle, and you want to see price close above them. So if we can close above them, this shows a change in the state of delivery. And then when we have the 8:30 candle, we are going to utilize its opening price. Okay, so as you can see, we closed above the down close candle. So what does this represent now? We have a change in the state of delivery and the market is bullish. If the market is bullish, what do we want to do? We are going to map out the opening price from 8:30. So this is the 15-minute candle from 8:30. We are going to map out the opening price. And if the market comes below 8:30, is going to represent we have a short-term oversold market, and this is ideal for us to buy. And what do we have overlapping? We have the down close candles which change the state of delivery, and we have a fair value gap. So all we do is wait and see if the market comes back below 8:30. So I've marked the 8:30 open. Then what is the next opening price we have to map out? We have 9 a.m. So we draw this out in time. And if the market is below 9 a.m. and we're below 8:30, what does this represent? And right now, if you wanted to scalp on the lower time frame with this knowledge, as we're above 8:30 and we were above 9 a.m., which was right here, what can you see? The market starts to trade lower. And where can we expect the market to trade into or be sensitive? We can expect it to be sensitive at 9 a.m. and 8:30. So if we get below 8:30 and 9 a.m., this will represent the market is oversold, and this is ideal for us to buy. And as you can see, we get below 9 a.m. and 8:30. So here you don't want to see any bodies close below the 8:30 open. Close below 8:30 open, anticipate the market to drop lower and continue to the downside. However, this isn't the case. We drop into the 8:30 open and we drop below 9 a.m. The market is heavily oversold, and this is ideal for us to buy. And this is in a logical area. We have the order blocks which change the state of delivery, and we have a fair value gap, and we drop below 9 a.m. and 8:30. No bodies close below 8:30. Ideal scenarios for us to look for longs. Now, what is the next opening price we look at? Well, the next opening price we look at is 10 a.m. So this down close candle right here, this represents the 10 a.m. open, and this is what we map out. And if the market drops below 10 a.m., this will represent another ideal scenario for us to look to buy and target the buy side liquidity, which is right here. And as you can see, we drop below 10 a.m. This shows the market is oversold. And then where do we also drop below? We drop below 9 a.m. You can see how sensitive price is at these levels. And once we drop below 9 a.m. and we trade into a fair value gap, this is ideal for us to buy. And then we complete the market maker buy model. So these are the important opening prices for Forex when you are trading, and this is exactly how you should be utilizing them. You are looking at the closes above and below these opening prices to tell you a narrative. Once you have a narrative and a draw on liquidity, then add opening prices into the mix and it'll make your trading much more easier. So now let's go over an indices example. Okay, so here I have an example of NASDAQ on the M15 chart. You guys can see we have buy side liquidity rested above this high, and we have sell side liquidity resting below this low. So what will our narrative be for today? If NASDAQ runs out this high and we get a change in the state of delivery, we will look to target these lows, and we will utilize the opening prices I taught you guys at the start of the video. So we take out the buy side liquidity, and you can see this is the 8:15 open. price touches back into the opening price and then we rally away and trade into the buy side. So if we want to trade lower, we look for a change in the state of delivery and we look for price to close below these 3 green up close candles. So as you can see at the 9:30 open, we drop lower and close below the 3 green up close candles. So we're below 8:15 and 9:30. Currently the market is in a short-term discount and we can expect the market to rally higher, get above 8:15 and 9:30, and this is going to be ideal scenarios for us to look to short. And as you can see, we get above 8:15, we trade into this fair value gap, and then we trade into 9:30 and trade away. So then what is the next opening price we look at? The next opening price we look at is 10 a.m. So if the market goes above 10 a.m. and 8:15, this is going to be ideal scenarios for us to look to short. As you can see right here how sensitive the market is, and we're not closing above the opening price. As we're not closing above the opening price, this gives us more conviction the market wants to go lower. And as you can see, we trade into the sell side liquidity. So this is exactly how you will be utilizing the opening prices and indices and the Forex market. So if you made it this far into the video, I hope you found it insightful and you learned something new. The next video is going to be about time and price theory within Asia session and the London session and how you can utilize it in New York as well. So that will be in part 3. However, I want to thank you for watching this video, and as always, I'm rooting for you and I hope you find success in this business. As always, have a good rest of your day.